As the earnings season comes to an end, investors remain on edge. Inflation concerns remain high, unemployment hasn't been this low since the 1950s, and add in concerns about wage increases, or a lack thereof, and, understandably, investors are pulling some of their chips off the table. The S&P 500 is down 6.52% from just 1 month ago. But, with any market, there are buyers and sellers. And for some, stocks are cheap. This article will cover the 3 most undervalued dividend aristocrats today. If you're a dividend growth investor, you've likely heard of the Dividend Aristocrats, a list of S&P 500 listed companies that have increased their dividend for each of the past 25 years. There are currently 66 dividend aristocrats, and the list is filled with boring blue-chip stocks. And, while they likely won't move up or down 25% in one day, as Meta did last week, they do provide reliable dividends increases. How to determine stock cheapness? There are 2 primary ways investors can gauge whether a stock is cheap. One way is the P/E ratio, a calculation that reflects the stock price divided by its EPS, earnings per share. The other way is assessing the stock's 200-day moving average, the average closing price of a stock, for each of the past 200 trading days, or almost 1 year. Investors like to look at the 200-day MA as it can indicate value. While the P/E might provide insight into what analysts think a company should be valued at, the 200-day MA tells us what the market thinks. As a result, I tend to prefer the latter. 2 most undervalued dividend aristocrats today. The following 2 dividend aristocrats are trading well below their 200-day moving average, the average closing price over the past 200 trading days. And, when stocks trade below the 200-day moving average, investors may infer that they are undervalued. These stocks trade at the biggest discount against their 200-day MA. Leggett & Platt Incorporated, LEG. You may not have heard of Leggett & Platt Incorporated, however, the company is a force to be reckoned with. The company designs and produces various engineered components and products worldwide. The company operates through 4 segments: residential furnishings, commercial products, industrial materials, and specialized products. Residential furnishings offers inner springs, wire forms, and machines to shape wire into various types of springs, steel mechanisms and hardware, etc. Commercial products provides molded plywood components, bases, columns, backrests, casters, frames, and control devices for office chairs, private label finished furniture, beds and bed frames, and adjustable beds. It serves office furniture manufacturers, and mattress and furniture retailers. Industrial materials offers drawn wires, fabricated wire products, and steel rods. Specialized products provides mechanical and pneumatic lumbar support and massage systems, seat suspension systems, motors and actuators, and control cables. Year to date, the stock is down 9.29%, slightly underperforming the S&P 500 index. Dividend information. Leggett & Platt Incorporated currently pays $1.68 a year, representing a hefty 4.19% dividend yield on their common shares. Furthermore, thanks to the company's dividend-friendly management and durable competitive advantages, the company has raised its dividend each of the last 49 years. 1 more year and they will make the coveted Dividend Kings list, a list of companies that raised their dividend 50+ consecutive years. Earnings update. Leggett & Platt Incorporated reported fourth-quarter earnings yesterday, on February 7, 2022. Revenue came in at $1.33 billion, ahead of estimates of around $1.29 billion. Further, reported EPS was 77 cents, while consensus estimates were 73 cents per share. Technical indicators. Leggett & Platt Incorporated stock's last trading price of $37.41 represents an approximate 20.2% discount over its 200-day moving average of $46.89. T. Rowe Price Group Incorporated, TRO. Headquartered in Baltimore, MD, T. Rowe Price Group Incorporated. T. Rowe Price was founded in 1937 by Thomas Rowe Price, Jr. Today, the company is a global investment management organization with a market cap of over $33 billion and is roughly correlated to the Nasdaq. Most of T. Rowe Price's assets are invested in the stock market. The company provides a broad array of mutual funds, sub-advisory services, and separate account management for individual and institutional investors, retirement plans, and financial intermediaries. Along with much of the broader stock market, especially tech stocks, January 2022 was a difficult month for T. Rowe Price. The stock started to slide on January 12, 2022, and appears to have found its bottom on February 3, 2022. T. Rowe Price stock is down 21.97%, underperforming the Nasdaq's minus 11.48% over the same period. Dividend information. T. Rowe Price Group currently pays $4.32 a year, representing a solid 2.77% dividend yield on their common shares. Furthermore, thanks to the company's dividend-friendly management and durable competitive advantages, the company has raised its dividend each of the last 35 years. Earnings update. At Yet 21, the company finished off with $1.688 trillion under management, of which a significant portion includes high-flying tech stocks. Indeed, T. Rowe is famous for being an early-stage investor in some of the most promising start-ups. T. Rowe Price Group Incorporated reported fourth quarterly earnings on January 27, 2022. Adjusted earnings per share of $3.17 came in ahead of estimates and represented a 9.7% increase from the same quarter a year ago. Technical indicators. T. Rowe Price's last trading price of $151.84 represents a whopping 23.4% discount over its 200-day moving average of $198.23. As a result, T. Rowe Price Group Incorporated is the most undervalued dividend aristocrat today.